Folks, today I want to talk about big growth coming from stocks that are priced under $5. Look, for the past few months, markets have been full of surprises. Just a few months back, the markets were showing some of the worst selling pressure in history. And now, as we look back at the carnage with unemployment rate at 5%, including 38 million people unemployed, the markets are starting to heat up again. Keep in mind, markets always anticipate or look ahead, and right now the markets are already looking post-COVID-19 recovery, with some stocks trading near all-time high once again. Just look at the NASDAQ 100. Price action is only points away from old highs. Even the S&P 500 is pressing against the 200-day moving average and on its way up. And volatility, well, it continues to decline rapidly. Everything is pointing to a market that's looking ahead a few quarters into the future, past the COVID-19 worries dominating the current landscape. Now, in my opinion, and I'm not the only one thinking this, but we're at a major turning point for biotech stocks for two major reasons. First, consumer discretionary spending is drying up, GDP is negative 5%, and unemployment numbers are 38%. Ouch, ouch. Recently looked at the fastest gaining hedge funds, and guess what? Apple, it's no longer in position one. Consumers are having to spend less money. No vaccine for COVID-19 in place and thousands of stores and restaurants going out of business. That's a recipe and for less money spent. And you don't have to be an Einstein to realize that consumer-driven stocks are going to take a backseat to other sectors, particularly healthcare. Keep in mind, this recession or depression driven by health and not by the overall conditions of the economy. We already know that the federal government is allocating trillions of dollars into the markets, and substantial portion of that is going into healthcare and biotech. Matter of fact, we haven't seen a catalyst for health and biotech like this in years. Whether you're working on a vaccine for COVID-19 directly or indirectly, capital is going to continue flowing into health and biotech. Just think of the hundreds of biotech and healthcare ETFs, some which are big health and biotech, some are small ones. That means the entire sector is set to rise, regardless of market cap of the company. And that's why today I want to look at two healthcare stocks priced under $5 that, in my opinion, are primed for both long-term and short-term price gains. The first stock on my list is Kadmon Holdings, KDMN. Again, KDMN. It's engaged in discovery, development, and commercialization of small molecules to biological diseases. The company is currently working on drugs to treat immune disorder, fibrotic diseases, and immune oncology. The company already has a drug called Clovic to treat Wilson's disease that's currently being marketed. This tells us that the company is not relying on drug trials, and it's currently bringing in income from other sources, moolah, money. Biotechs can be risky when all hope is focused on one drug, whether or not it makes it or not, especially in light of expensive trials, which come with no revenue. Now, the CEO of Kadmon, Samuel Waxel, former CEO of Inclone, which is very solid and reputable biotech company. Both drugs are in development trials in phase 2, meaning there's potential, serious potential in both cases. Furthermore, there's a strong chance the stock will be taken over in the next few quarters. The stock has 5 strong buy recommendations, and over the last 4 quarters, positive earning estimates, which attract institutional sponsorship and cause price of the stock to rise. Relative strength has been outperforming the market in recent weeks, and the price of KDMN is whopping $25 per share expectation, which would give us a massive return on shares if the company continues to accelerate progress. The next stock on my short list is Immunogen, IMGN. The company specializes in drugs primarily for the treatment of cancer. The company's product candidates are called tumor-activated prodrugs. Fancy, right? And are based on its proprietary immune technology platform. The company already generates revenue from drugs that are being marketed. More importantly, it's got 2 drugs in phase 2 and 3 trials, which means there's potential value here. The company remains small with a market cap less than $1 trillion, which gives us potential for major upside growth. The stock gained over 160% over the past year and generates substantial revenue from partnering up with other bigger biotech companies, which usually leads to a buyout. especially if the company's already generating revenue. The stock has a high price target of $9, and I believe in the next few quarters, there's a high chance we'll see that price target or the price near those levels or even higher, especially if the buyout occurs or if the drug in clinical trials continue to pan out. With Fed and central banks focused on eradicating the world from COVID-19 and money flowing back into the biotech and health industry for the foreseeable future, these stocks will see a sharp increase in institutional sponsorship yield and more buyers coming in the next few months. Hope that helps. Folks, no one knows how to profit from a flash crash or a rebound quite like I do. And I have just the thing you need to survive and thrive in today's market, a system that works during and after a huge market crash, protecting you on the way down and delivering stocks primed to explode higher. I've already predicted a 66.10% return on one of the stocks, and I have a feeling the $2 trillion stimulus package could force my newest pick even higher. Folks, don't hesitate. I've got a feeling it's going to be a good one. Click on the link below to get my #1 rebound stock pick now.